Happy long weekend, traders. Robert H here. Thought I would make this video regarding the 2-minute chart, or regarding time frames in general. So people keep asking me, Robert, I heard you switch your 1 minute to a 2-minute, and they're asking me, how do you integrate that in your trading? Do you feel you're losing out on information? Do you still make your decisions based off the 5? How's it affected you? Yada yada yada. So this video is going to answer all of that. I'm going to refer people to this video in the future. So this person emailed me the other day, and they asked me how long I've been using it, etc., etc. I told them, I've been using it for a few months. I find the patterns are more recognizable. They are more similar to the things I trade off the 5, right? Little ABCDs, little flags, and stuff like that. A lot less noisy for sure. Things are just more smoothed out. So they came back to me and said, okay, Robert, look, I did this analysis 2 minute versus 1 minute, and they drew these, little boxes explaining what they saw. So on the 1 minute, confirmation candles would have stopped out here, maybe I'm not sure, maybe they thought this was a reversal or something, or they would have stopped out. Oh, okay, so it was a pullback, right? And then on the 2 minute, they saw that it was not reversing it yet, right? But based on whatever they saw, that it didn't touch the MA, I guess they're assuming. So I said, cool, all right. So I pulled up the chart, and obviously this is a downtrend. Regardless if you look at it from a 15-second time frame, a 1 minute, a 2 minute, I think it's immaterial what time frame you're looking at. This is obviously a downtrend. So I pulled up the chart and I said, hey, yeah, you're right. Don't get caught up in the minutia. 1, 2, 3, 4 minute charts. This is lower lows, lower highs. This ain't coming back at this point, right? The VWAP obviously held some support there, but look at the 5. Look at the 15. Anyone who's going long during this is just giving away their money. All right, so that's one explanation that I provided back. Now, an analogy I want to use to explain this concept is the concept of frame rates per second. Frame rates per second, right? In animation or video or film, you can capture frames at a different rate, right? So you can go up to in gaming, there's up to 244 hertz now, frames per second. But in terms of film, 15, 30, 60, whatever that may be. Now, if I were to ask you guys, which one's easier on your eyes? I think this really depends. Some people get headaches when the frames are too fast. Some people can't stand low frame rates. It's choppy to them. They can see the stuttering and stuff like that. It really depends on you as a person. But what if I were to, let's take a step back here and say, I show you all these 3 different things, 15 FPS, 30, and 60. If I were to ask 3 different people looking at these, you still understand the story, right? Is this not the same thing happening on the screen? Just it's being captured at different intervals. This is the exact same story, right? You comprehend what's happening. It's a guy jumping and skipping, right? I don't think it matters how many frames per second you're looking at it through. It's pretty obvious that this is the plot, or this is what's happening on screen, right? So that's one analogy for it. I'm trying to answer one question here, and the question is, who is in control? Bears versus bulls. What is the price action telling us? Let's get to some charts here. In front of me I have 9 charts. 9 charts. So let's take a look at what's happening on each of these charts. This is going to be time consuming, but I want to prove a point here. So this first chart, you can see some sort of failed bull flag here, right? It popped up, couldn't make a new high, and then it started making a low. It cracked this level and then sold off. Sold off, pulled back above the VWAP, did another leg, pulled back again, kind of consolidated a little bit more, did another leg, sideways consolidation, another leg, right? So that's kind of the price action coming down in waves. I've said that before. Price action comes in waves. People are catching the move. There's consolidation as there's a short covering rally, right? And there's who knows, people are out here going long against the trend. That happens, and it turns out the bears are in control. So next chart here. What's happening in this chart? Well, you got another breakdown of some sort, right? Some sort of orb. Then you get a L-shaped bear flag, another L-shaped bear flag, another L-shaped bear flag, right? It's pretty smooth. No new highs are ever made, right? No new highs are ever made during this run. Whereas here you have pullbacks that there are new highs made. Right? I hope you guys can see that. This next chart over. So this next chart over, let's take a look here. What do you got? Well, you got some sort of huge engulfing candle, and there's kind of a flat bottom. Well, there's a pullback first, and then there's a kind of a consolidation phase, and there's another leg. Then you have another kind of L shape. Then it bounces off this MA. Notice it bounced off this MA. This one bounced off this MA. Next chart. Then you got a huge top wick, right? Selling pressure, couldn't break up. The bulls lost control. Then you got an engulfing, a pullback, another nice flat bottom, collapse. It doesn't get to this MA before it engulfs and comes back. This one here, spinning top, indecision, right? Engulf, engulfs, and then it's an opening range breakdown after it covers the body. Nice L shape here, and then kind of rounds out towards the bottom on these double hammers, and doesn't make it to the MA. Next chart over, some sort of shooting star, indecision, crack, right, and then reverses off arguably this MA, right? Kind of never lost that MA. Here, another massive shooting star, right? Massive shooting star, and then just collapses on 2 candles, bounces off that MA. Here, similar type of deal to, was it this chart here? Similar to this chart, right? It's some sort of orb, pulls back first, and then it does an opening range breakdown, gives us a hammer, bounces off the MA. Finally, this one, very similar to the previous one. It's an opening engulfing, as well as a huge top wick, but it's also an orb of some sort, right? And then it bounces off this MA. So these are all, I'm just gonna let the cat out of the bag here. This is all the same stock on different time frames, and I'm gonna skip forward and show you guys that in a second. But this is the price action viewed in line format. I don't know if you guys have seen this, line format. It's not candlesticks, it just updates the line based on whatever settings you choose, but clearly this is what happened. It ran up, lost steam, sold off, pulled back to the VWAP, went for another leg, pulled back, consolidate, went for another leg, pulled back, consolidate, went for another leg. You see how this moves in waves? This is what the stock market does. This is human mass psychology, right? And it happens the other way. Goes like this, right? This is what the market is. The market is A, B, C, Ds, or whatever you want to call these flags. As people catch a move, there's consolidation and indecision, or people are covering and getting out of their position. Other people are now entering once the price gets to a favorable point, and then it goes for another run, right? And unfortunately, I've seen this. People are going long here, guys. People are going long against the overall trend. This is kind of like what that email that person had sent me with that thing here, right? Something about not reversing yet. And who's looking for reversals on the 2-minute chart? There's people looking for reversals on the 1-minute chart. It's you got to take a step back and see what's actually happening here. This is not a reversal. The reversal was here. It's going down, right, off the 15. This is going down. The trend has changed. The bears are now in full control. Full control. No, there's not even a new high can be put in here. Every candle's lower lows. All right, so I hope that explains that. Now I'm going to switch back to let you guys in on what time frames am I using here, right? And does it matter? All right, so the stock in question is actually CGC. This was Friday's price action, February 14th, and it was a big gap up. I believe the previous day close was somewhere here. It gapped up, obviously profit taking, and then the bears and the selling pressure just took control before it was able to reverse back to the VWAP. So that's the 1-minute line, right? Let's switch over to back to here, right? So CGC, this was a 1-minute chart. As you can tell, many of you probably guessed, the time frames are getting larger and larger as we moved forward. The 1-minute chart told us a story. It told us a story that this thing was selling off in waves, right? Now the question is, do you get spooked out by new 1-minute highs? Do you get faked out by these little double white candles coming in, right? Personally, for me, I found that this is too noisy. It's not as clean as the way I like things to appear compared to the 2-minute chart, right? So the 2-minute chart, this is more clean to me. I recognize these patterns, L-shaped bear flags, right? These are the patterns I trade. They look very similar to the L-shaped bear flags I trade on the 5, but I'm getting better entries, right? This breakdown here is probably happening much sooner than on this time frame. So I'm getting a higher entry and my stop's probably a little bit tighter. And conversely, on the 1-minute chart, you get way better entries, right? If you're taking it on a breakout down here, if you're getting it on a pullback of here, whatever that may be, right? Because you're zoomed in more, right? You're zoomed in to the battlefield. You have a better sense, the foot soldier's perspective, right? You're not looking at it from a 30,000 foot view, the bird's eye view. You're getting better entries, better exits, but you have to keep in mind that you are going to experience more noise. I think this is a thing that a lot of beginners they struggle with. They want to get the good entry, so they're in on the 1-minute chart, but they're not able to filter out the noise, and they are getting fooled and faked out, right? People are longing downtrends. People are shorting uptrends because they think they see things, ignoring the bigger picture, right? They get tunnel vision. So anyways, move on to this is the 3-minute chart. People trade off this. This is an engulfing. That's very bearish signal, right? That's pretty clean price action. I don't know who uses the 4-minute chart, but a similar story here. Engulfing, the nice flat bottom. This was a 5. This is what a lot of us use as our main principal chart, with either a 1 or 2 or a 3 as the kind of the complementary smaller time frame chart. But you know, this was pretty clear. Huge sell-off, pull back, and then you find a short. Find a short somewhere here, right? Find an entry somewhere here, using the moving averages or previous candles as your stop, right? Risk management's where it's at. I believe previous day close was down here. This was the target. Previous day close was somewhere here, so that was a pretty good risk to reward off the 5, right? 6-minute chart, I don't know who's using that, but similar story here, right? That huge selling pressure. 9-minute chart, I'm just picking stuff at random. It's the same story, right? We're looking at different frames per second. 10-minute orb, 15-minute orb, right? Anyone trading this stock is going short. I don't care, you know, I don't care what time frame you're looking at. It's the same story. So basically the lesson here is that whether it's a 1 minute, 2 minute, 3 minute, 4, 5, 6, 7, 7.4, 12 and a half, I don't really care. What are you comfortable looking at, right? What does your brain and do your eyes recognize in terms of what's happening in the price action? The fundamental question is, who is in control, bears or bulls? Whether you want to look at that through a 200x zoom microscope, 100, you know, 75 all the way down to here to 10x, or you just want to look at 1x, right? During this 15-30 minute window, this was selling off. So what time frame suits you? That's a question for you guys out there. What are you more comfortable trading? How do you interpret the price action? Through which lens, which perspective are you able to comprehend better? One last thing before I go here, guys, I want everyone to leave your comments down below. What do you see in terms of technical analysis that I don't see? I just took a second look at this. I saw double bottoms here. I saw moving average crossovers that sent the price action the other way. Those actually kind of just led to hammers, which are obviously reversal signals. There was also moving average bounces. There's so many things here that we all see differently, and that's the beauty of the stock market. There's an infinite number of ways to trade. The more people who agree on something is what drives the price action in one direction. So please leave it down in the comments below. What do you see that I didn't see?